Hello and welcome to this special segment called as MC Pro Select Stock of the Day segment. In this segment, we bring to you fundamentally strong, actionable stock ideas, and I'm your host, Nikki Birchandani. Well, let's get to know more about the company first. We're talking about the stock of the day as PI Industries, one of the largest agri-sciences and fine chemical companies and leading player in agrochemical CSM, that is custom synthesis manufacturing export business out there. It drives majority of its revenue from the patented products, and if you talk about the expansion to its CSM business, PI has been laying increased focus on pharma and electronic chemicals per se. Recent underperformance of most of the agrochemical stock along with PI, they've corrected recently, majorly on concerns of El Nino and likely subpar rainfall this monsoon season. Now, why the stock can re-rate? We give you 5 reasons. First is announced strategic acquisition for the pharma CSM. On April 27, 2023, PI signed a share purchase agreement to acquire 100% shareholding of TRM India, certain identified assets of US and the German-based agrochemical SPA. In this, TRM was acquired for a consideration around $50 million and the German-based subsidiary for 34 million euros. Acquired entities are engaged in CRAMS and CDMO business of API, that is active pharmaceutical ingredient, and the intermediates of pharma API. Integration of these entities is expected to be completed in the first quarter of this financial year. The valuable acquisition, right? If you talk about the margin profile, TRM is better as compared to PI, while the German-based company margins are a bit lower. Acquired business will add new capability for PI across the pharma value chain. New business will also be earnings accretive in nature with immediate effect. Acquisitions appear to be executed at a reasonable valuations per se. Now, the custom synthesis business is expected to remain steady. PI existing agrochemical CSM business remains largely robust at this time. Diversifying into the pharma CDMO segment will solidify its business model. The management remains optimistic on outperforming the overall CDMO market growth of 8 to 10%. Talk about the balance sheet. It's healthy out there. Acquisition will be paid in cash and funded from internal accruals. PI completed QIP of around 20 billion rupees in June 2020, and the net cash position also remains decent at 2,896 crore as of 9-month ended FY23. Valuation rich but justified at this point of time. PE as around 39 times its FY24 projected earning. It trades at a premium as compared to its peers. Multiples, however, are justified at this point of time. Things that we like to watch out for would be 2 parts: additional regulatory risk and relatively longer gestation period associated with pharma CDMO and generic API. Also, execution in this new end market would be tested and needs to be carefully watched out for. Well, that's that in terms of stock of the day. Do tune in for more.